Recording in
Hello,
progress.
everyone. Thank you very much for stopping by. So I'm continuing my journey on using velocity banking and reducing my overall debt in general. So velocity banking has been a part of my vision in reducing my debt. I'm trying to really structure myself in terms of acting like a business, operating like a business, and making things a little bit more efficient and effective. One of the things or strategies that I'm looking to do is to incorporate more SMART goals. SMART goals are goals that are more specific, measurable, action, results, and continue to be time bound. In this example, I'm going to go through what I hope to achieve in 2025 by using SMART goals and being more efficient and effective in trying to do velocity banking. So when I first started velocity banking in last year of 2024, I had about $351,000 in debt. As of today, I have $149,000 in debt according to the Experian profile. So to continue along this pattern, trying to, like I said, really include SMART goals in terms of what I'm doing and being specific. So the SMART goal that I'm looking to do is reduce my Experian credit profile by $110,000 by 12/30/2025. When I first started and I was at 351, I had 3 mortgages, 12 credit cards, a student loan, and other debt. As of now, you can see that I'm down significantly. Now, the strategy in terms of using velocity banking is the how and how I'm going about do it. There's 3 specific ways that I'm using as the how, but I continue to have other things in terms of the how. So the how to try to reduce this $110,000 debt by 2 mortgages include: one, I want to increase my financial literacy. I'm gonna do that by watching some other content creators, reading books, magazines, and journals. 2, I want to explore other financial products like I did before with the cash advance, the convenience checks, borrowing from one bank, using a budget. So these are multiple strategies that I would be including, but the main ones: increasing my financial literacy and also exploring other financial products at credit union, banks, and private lenders. The tactics are the specific actions of the tactics are specific actions that I must do to achieve the strategy, to achieve the goal, to help with my vision. Again, vision, goals, strategy, tactics. So the specific tactics that I've used last year and will continue will be: one, I want to watch YouTube. So on average, I'm giving myself 7 hours a week. So as I go to my W-2 job, as I finish things that I need to do at home, I'm committing at least 1 hour a day to watching. 2, I want to use pre-approval. So I've gone to different websites, used the pre-approval products just to see my credit report, or the credit report. I hate saying my credit report, the credit profile of me on these various websites, and then look at the score that's given. There are so many different credit models out there in general. For instance, I went to one bank and they had the FICA 8. The FICA 8 had me at 728 points. Then I went to another bank that used a FICA score 9, and that had me at 778, and that was on Experian. For many of you who don't know the FICA is just one model that's used by creditors to, I guess, evaluate risk. Your risk of paying back insurance, your risk of paying your student loans, your risk of paying mortgages, credit cards. There's different types of credit model. So 3, the third tactic or action that I must do to reach the strategy, to reach my SMART goal, to hit the vision, is to create a budget. For me, when I first started off with my budget, I had probably a cash flow of $350 after I paid all my bills and expenses. Some of the debt has been paid off. I moved from about 12, 13 credit cards to 3 credit cards, so I have more cash flow. So I'm gonna have a different budget next year. But right now, I can say that my cash flow is probably $700 to $800 more now per month than it was at the beginning of the year. Now, one of the key things behind the velocity banking is the idea of compounding your cash flow. So when I first started with $350 for my cash flow, that sat there inside of whatever debt I was trying to pay down. So 1 month was 350, February 350, that's 700. Then I added another 350, and it's compounding inside of whatever debt or credit card that I was trying to pay off. Now there are some months that cash flow was lower because I tried to pay like auto insurance three to 6 months in advance. So I may have to kick out $600 or $700 a month. That reduced the cash flow. But my cash flow on average for the first 5 or 6 months of the year was about 350. So that compounding effect. And again, as I mentioned in other videos, I'm using a number of different other strategies to get that compounding. One example of compounding interest that can be against you, or that compounding effect, is a credit card. So when you only pay the minimum payment, then the interest compounds on top of the previous months and continue to grow against you. With velocity banking, there's a potential to reverse that compounding effect in your interest, and that my cash flow is sitting on a credit card or a line of credit. Now, the result, after doing the tactics that lead to the strategy, that leads to the goal, smart goal, that leads to the ultimate vision of really understanding and implementing velocity banking, I should see lower debt, and I saw it last year. I should see higher credit. I have now higher credit about 25 to 30,000. I should see a higher cash flow. Last year, as I mentioned, the cash flow went from about 350 to about $800 a month now in cash flow. And 4, more efficient, effective, and equitable business operations. So in general, I really wanted to introduce you to my attempt to use more SMART goals, strategy, tactics, those results, to gain a better understanding of velocity banking and use it to my benefit. I've been able to go from $351,000 in debt at the beginning of the year to $149,000 in debt, using about 3 credit cards that I'm paying. The other thing is that the 3 credit cards that I really have left are business cards. So when I charge things onto the business credit side, it's not a part of this profile. But I had to get to this point. When I first started, I had about 13 business and consumer credit cards that I'm using. Now I'm down to 3 business cards that I'm using. And with those 3 business cards, it's not really reporting to my personal credit. So I really cleaned up my personal credit with velocity banking. Now I have credit really on the business side, and it's helping to continue to push my credit score up. All right. So again, thank you all of my clients. I appreciate the opportunity to work with you, to look at this strategy and do different things that help you reduce your debt. And if you like for me and my team also to help you, definitely you can give me a call or you can email me anytime. All right. Thank you very much. Have a great day, everyone. Really appreciate you.